Hey everybody, John Cooper here, the real estate guy. I was working a little email up about that 2019 economic forecast. It's the beginning of the year. I've been kind of diving into some little stock purchases here and there, so I've been kind of looking at what the economy's doing, look what jobs doing, what GDP is doing, all that kind of stuff. So in that email I sent out, there is some stuff. I'm going to throw this video in there as well, so that stuff's there below. But just talking about what's going on. So the end of 2018, Feds seemed to raise the rate a little bit. It kind of slowed down the real estate market a little bit. Sacramento area, Bay Area, this area, it's kind of a little niche market. If you go in the Midwest, they're going to have a different market compared to the East Coast as well, and the South, what all that kind of stuff is. But Sacramento's kind of an interesting market. We have a lot of the baby boomers, the silver tsunami's hitting. We have a lot of people getting out of their houses, wanting to downsize. A lot of people retiring, making significant life changes, getting the kids out of the house, all that kind of stuff. So that's dramatically changing the shift in the real estate market. We're seeing some good demands in the retirement communities. A lot of people going in there. The Bay Area, we're getting a ton of people coming out of the Bay Area. They're getting sick of the commuting. They're getting sick of the driving, all that kind of stuff. So the Bay Area people have seen crazy amounts of inflation. They're selling their houses, especially retired people, bringing their cash, bringing it out here into the Sacramento area. We have so much to offer. We're close to the Sierra Nevada. We're close to Tahoe. We're close to Truckee up the 80. We're close. We're still hour and a half easily to get to the beach. We're right in the middle of the state. It's like probably the best area you could be in. And so all the Bay Area, you sell a house for $1.5 million in the Bay, you can come out here and buy even bigger house for $750,000, $800,000. It's crazy. So 2019, it might slow down a little bit. Feds bump the rates. People are kind of payment sensitive. When you get the higher prices, a little rate jump changes their buying power significantly. You see more of a change in buying power from a rate jump than you do from putting money down. So if you saved up 10% and you got a little rate bump, it's going to significantly change your payment more compared to putting another 5% down or something like that, if that makes sense to you. So 2018 was a big boom. 2017 was a big boom. From 2010 was kind of like the bottom of the market. 2000, mid 10 to early 11 somewhere, and then it just shot up like a bottle rocket going off, right? So 2018 we saw some good inflation, or some good numbers. The end of 18 definitely a little bit of a slowdown. Buyers are pulling back a little bit. They're wanting to, if you're going to be spending that much money, they want a really nice house in a really good area to spend that type of money. So if you got a little bit of some work to do, maybe do it, and then prep for spring. Spring's coming. You're going to see the big transition. I know a lot of older people, they watch what happens with administrations and all that kind of stuff. They watch what happens with families. They know, hey, families are going to be moving in the spring, so I'm going to wait until spring. They really try to time the market more. Whereas someone who has to sell, they're going to have to sell. It doesn't matter what, right? Real estate's always bought and sold. It just depends when and what circumstance you are. So economic forecast 19, I think we're going to be doing okay. We're going to see some inflation in housing. Housing prices still going to be decently strong. It's probably going to go up a little bit in the spring. The cycles, spring, summer, fall, winter, all that kind of stuff, I think those are going to be a little bit, they're going to affect the real estate market a little bit more compared to prior years where people were just going gangbusters, hey, $300,000 for a good house all day long, where now you're just that same $300,000 house is $350,000, maybe $375,000, depending on what area you're in. So a $50,000, $75,000 increase over the last couple of years is affecting how these people are looking at what they're buying. So 2020, it's hard to say. It might have a new administration coming in. 2021, 22, 25. I think people are super gun shy, so they're slower to make decisions now. Back in 2010 in the bottom, people were getting bit, doing tons of short sales, all that kind of stuff. So now that they're buying, they're kind of making longer predictions in their lifestyle instead of just rushing out. So we're seeing maybe a better economy. Hopefully it stays pretty strong into 22, 23, 24. It's terrible to say, but I love a bad market. You buy a property, you buy low, sell high, all that kind of stuff. Watch for stuff to go down, pick it up, and then hang on to it. But it's all cyclical. So, in the next 10 years, we could probably definitely see another downturn. So John Cooper here, the real estate guy. That's my kind of feeling for 2019. I think we're going to be okay. 2020, probably the same, maybe a little bit more of a slowdown, but I think we're going to be doing all right.